where our market cap is about 70 million Australian dollars. We're heading into production at the end of 2025. We've got a PFS out in the public domain that talks about a cost of production of $2,800 a tonne. Even at the depressed current market, it's a highly profitable operation.
Hello, you're watching Proactive. I'm joined by Paul Lloyd. He's the Managing Director of Arizona Lithium. Paul, very good to meet you. You're out with news of a deal that will raise $11 million in non-dilutive capital. Before we get into that, for viewers not familiar with the company, tell us a little bit about Arizona Lithium.
Yeah, hello, Stephen. Arizona Lithium, and the ASX code is AZL. And we have two large lithium development projects in North America. And we are progressing those. The major one is the lithium brine project up in Saskatchewan, Canada. And I will tell you a little bit more about that in the future. But we do have a world-class deposit up there in Saskatchewan.
Okay, so and your other one is the Big Sandy project that's in Arizona. So you've sold a parcel of non-core acreage, and that's at the Prairie project. How do you plan to use the proceeds of that to take the project forward?
Yes, well, that $11 million will be banked tomorrow, and it effectively creates $11 million into our treasury without the issue of any more ordinary shares. So non-dilutive to existing AZL shareholders. So very positive response today from that announcement. And we'll utilise those funds to fast track the development of the Prairie project. It's definitely a production project, and we're aiming for production at the end of 2025. We're applying direct lithium extraction, and we do have a world-class deposit there of 6.3 million tonnes of lithium carbonate. It's in an oil and gas producing region, so infrastructure is very attractive. And just over the border in Canada is a huge advantage for permitting, etc. We've got 390,000 acres of land up there, so a very large land package. And we've now sold that 50,000 acres, which were non-core. They weren't ideal opportunities to develop in the short term. And so we've taken the opportunity to take that money off the table and put it into our project, which is further to the south.
Tell us a little bit about the Big Sandy project then in Arizona and how far that is, Paul.
Yes, look, I'm the vendor of that project originally, quite a few years ago now, and it's a sedimentary project. There's a resource of 320,000 tonnes, and so geologically it compares to Thacker Pass in Nevada, and it's a very large project, and we need to get back there and drill that project out. We have an 11-year mine life presently. We'd like to take that to say 50-year mine life, and start doing the studies on DFS and etc., decision to mine, etc. But our market driver for this company is definitely the Prairie lithium brine project in Saskatchewan.
Paul, take us through some of the dynamics of the lithium markets at the moment. I mean, there has been some big news out recently.
Yes, there's been some really big news out, and we are lifting off the bottom, I believe. The commodity price doesn't tell us that, but we just feel like we're seeing some green shoots out there. And we've seen a change in the lithium market. We jumped a little bit too early in regards to lithium brines in a producing oil and gas region, but we hope that we will be the first to go into production using direct lithium extraction. If you look back on when Exxon moved on a company called Galvanic in the Smackover formation, that was sort of a sign that large companies are entering this space. And we see news out today that Rio are looking to increase their exposure to the lithium industry. So I think it's a natural progression. I think it's a natural progression for oil and gas companies in the US particularly to enter this space. If you're talking about direct lithium extraction, you're talking about moving large volumes of water, and it's pretty much the same business model as these hydrocarbon super majors apply in Texas and all over the world effectively.
Paul, briefly give us the investment case for Arizona Lithium.
So Arizona Lithium, where our market cap is about 70 million Australian dollars. We're heading into production at the end of 2025. We've got a PFS out in the public domain that talks about a cost of production of $2,800 a tonne. Even at the depressed current market, it's a highly profitable operation. If that commodity price goes back to something like $20,000 a tonne, it's highly profitable with a world-class deposit. And we have done a lot of testing on direct lithium extraction. So it's a very de-risked project, and every month goes by, we de-risk that project more by further drilling and completion of our flow sheet, etc. So very exciting times ahead for the AZL shareholders in 2025 by hitting production.
Well, Paul, I hope you'll keep us updated on any progress. Thank you very much for the introduction today.
Thank you, Stephen.
That's Paul Lloyd, the Managing Director of Arizona Lithium.